Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the Senior VP and Director, Des O'Kell from Enterprise Group. Enterprise trades on the TSX Venture Exchange under the symbol E. Actually, I think it trades on the TSX Exchange, and it also trades on the OTC under ETOLF. The company is currently trading at 75 cents with about 50 million shares outstanding, or about a $37 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. First off, Des, congratulations. Great set of numbers came out today. So our timing is pretty spot on here to catch you to basically, to get updated. We've had a couple chats in the past, but a lot of our subscribers, this might be the first time they get a chance to hear about Enterprise. So welcome. And why don't we just dive right into it? Des, tell everybody what Enterprise is all about.
Yeah, certainly. Well, thanks for the invite here. Enterprise, first of all, we've got quite the history. We were just talking. We had our audit meetings here prior to the release this week, and that we're going into year 19. So we Len Drozik and myself, we founded the company back in 2004. We're up and trading as a CPC in 2005. Acquired our first businesses in those first couple of years of 2005 and 6. Quickly graduated from the venture exchange to the TSX in 2007. And since then, we've made about 9 acquisitions. We've had some very opportune dispositions over the history as well, and we've put ourselves in a real terrific position here in the energy sector here in Canada. We've obviously we had about a 7-year downturn that happened late 2014, about 2 years ago. So 2021, we came out of it. The uptick was on, and what we are in right now is a very healthy Canadian energy market. So what we do for our clients who are the producers. So what we do is when the producers are out there drilling, completing, and fracking, and building their plants out in the regions, we bring all of the site infrastructure. So we don't have any drilling equipment or fracking gear or anything, but we bring out all the site infrastructure. So all the office buildings on site, the command centers, the medic shacks, even the bathrooms, all of the lighting. There's a tremendous amount of lighting that happens out on these sites, and of course the power systems that power these sites. So this is all mobile gear that we have field techs that are making sure everything's happening and working on site. But we bring the site infrastructure so that these producers can be out on site 24/7 in all conditions, -30 and +30, and still have communications with head office, because we do have communication towers on site as well. So it's that full infrastructure, site infrastructures that we bring to the client. Our clients are, it's quite the list. We have a healthy list of tier 1 players, and all the way down to mid and small, cap producers and what have you. So, we have a long-standing reputation in the industry. As I said, we're approaching completing a second decade here. So we've been at it a while. The key to our story here lately is about 4 years ago, we started to retool our power fleet. And quick description here. Traditionally, sites on these sites, there's a good deal of diesel powered power generation. So at the bottom of every light tower, there's a 6 to 20 kilowatt generator, and you might have a half a dozen to a dozen light plants on site. So you might have in total anywhere from 10 to 20 diesel generators on site, chugging away 24/7, consuming a good deal of fuel. A typical site would be between 3,000 and 5,000 liters of diesel a day. So our clients are out there, basically paying a fuel distributor to bring that fuel up to the location. And that's a meaningful operational cost. What we have done is we've started to retool our fleet, where we're allowing our clients to transition away from diesel. And what we're doing is we're bringing out one very large natural gas-fired turbine, and then we have a microgrid that goes around the site, and everything plugs in. Now, the key to that is, first of all, the noise volume drops tremendously. You also have the safety and the environmental issues of refueling and the liquid fuel all over the place, as well as in 85, 90% of the cases, we're actually burning the client's fuel. The natural gas that they're producing on site or nearby is fueling our mobile turbine. So in this case, that fuel distributor check that for 3,000 to 5,000 liters a day is completely gone. But the key is that our large tier one clients are what are called basically if you're producing 10,000 cubic tons of CO2, you're deemed a large emitter. So if you're over that threshold, you need to track your emissions up and downstream that they operate, and of course, stay under a particular threshold. If you're over, you are financially penalized, and if you're under, you earn carbon credits, which show up on their balance sheet. So they're incented to reduce emissions. Our transition from diesel to natural gas allows them to reduce their emissions dramatically. It's 35% drop in CO2, and between 75 and 99% on things like NOx, SO2, and particulate matter. The nice thing is that we have developed this retooling of our power fleet. Started about 4 years ago, and we have this first mover advantage. None of our peers or competitors have retooled their fleet, so we're the lone player out here with this equipment offering, and it is the adoption rate. It has been terrific. I thought I'd slow down here for a call.
No, I love it. I love it. So what you're telling us is that's the big growth driver for your business right now is the new service, new product that allows for this sort of removal of the use of diesel and supplying sort of their customers' own natural gas. Give us a sense of like what's the addressable market for a product like this? How big could this get for you guys?
Well, I mean, first of all, across all of our business units, we have 4 business units. They're all in growth pattern. The activity levels over the last couple of years are much higher. They're going higher again in 2024. But there's no doubt, although the whole site infrastructure is in a trajectory that's going up, we obviously this new equipment offering and the adoption of it is also on top of that growth. So we're in a real good spot. I think I mentioned that the uptick started Q3 of 2021. You look at our quarterly reports, our revenues have been going up on comparative periods 20 to 30%. But the key is that our margins have expanded. It's a much better margin business. And the reason why is our field techs need to go out to site to make sure everything's working. This type of natural gas turbine is absolutely flawless and absolutely reliable. So the amount of moving parts and generators on site going from diesel to the natural gas, our field techs are making much less trips out to site, which is our cost to keep it going. So it is a better margin business for us as well. And I think going forward, I can tell you that we're in a very good energy market here in Canada. So we are going to have continued, this trajectory is still intact, but our promise to the shareholders is hanging on to these what we call very, very good margins.
Yeah, no, without doubt, the margins are certainly improving. So, but there's a number of services you provide. Give us a better sense as maybe a little bit more detail on the other services outside of just the power generation products that you sell.
Yeah, like I said, we have two businesses, Hart Oilfield Rentals and Westar Oilfield Rentals. They are very, very mirror-like companies. One just operates, Westar operates in northeastern BC, and Hart operates in Alberta. So they're very similar offerings, similar services and equipment classes. And of course, Evolution Power Projects is the specialty mobile power systems that we just talked about. The fourth business is Arctic Therm International. It is a IP-rich flameless heating business. So we have two classes of equipment there. We have the smaller 500,000 BTU to 1.2 million BTU pull behind like a trailer style heater that goes out to sites. It's flameless heat, so it can actually, because it doesn't have an ignition point, it can go right up to a wellhead of a gas or oil project. So very, very usable, extremely dry heat. So it's used in concrete curing. So places like Site C Dam up in northeastern BC, our heat was used there through the winter, curing, helping with the curing of concrete in sub Arctic conditions type thing. So those are the kind of rental units that we have, and we have a fleet of almost 200 of those. Then we have our large trucks, and they are a truck mounted 2.5 million to 3.3 million BTUs in a very truck mounted mobile outfit, and with air velocity pushing up that air out at anywhere from 8,500 to 15,000 cubic feet per minute. So big units. They were purpose built specifically at the time to heat pipeline steel at the construction phase. For example, the reason why you would want to get a thermal expansion of your steel is that we're drilling deeper into the earth, ever so deep, and the deeper you go, the hotter the fluids are. So more and more pipelines are carrying hot fluids. So when you build a pipeline and you commission it and you start running hot fluids through it, a kilometer of pipeline will stretch or thermally expand about a meter. Doesn't sound like a lot, but if you've got 10 kilometers of pipeline between risers, you've got 10 meters of thermal expansion. So what we do is we preheat the pipe at the construction phase, and while we're heating it, the weight of the earth they bury the pipe and get the weight of the earth and get connections all done, and two trucks kind of leapfrog in tandem. And that is what is called thermal pipeline expansion, and that's what these trucks were purpose built for, almost 2 decades ago. They're one of a kind in the world. They were patented. Patents obviously, runs out after about 20 years. So we're just off the patent, but they're the only items in the marketplace. So very specialty items. We had units out on the coastal natural gas line that's going to take gas to the LNG Canada, the Shell project out in Kitimat. We were on that line all winter heating a big 48-inch pipe. So that gives you an idea what those trucks. But when you've got mobile flameless heat in that kind of magnitude that's mobile, all sorts of things freeze up here in the Canadian North. So our trucks are constantly at places like Shell Scotford refinery out in the Edmonton area. Things freeze up all the time. So we're almost like a fire truck. Things get frozen and we get the call, and sometimes we can be out there for a week, sometimes a couple of months. So it's very, very unique heating technology. And it's really these units are something to see, that's for sure.
Yeah. I keep thinking the winter in Canada has obviously allowed us to perfect some neat technology. Okay, great. You got 4 different divisions. Is there any synergy between the divisions? Are you able to sort of cross-sell, or are they really distinctive? Okay.
Yeah. Obviously, all our locations, we've got 2 operations in Fort St. John. We're in Grand Prairie, we're in Whitecourt, and Drayton Valley. Our heating division is right out near Edmonton in a place called Morinville, and we've got a seasonal location up at Fort McMurray. So we've got all these locations. So when heat is needed, all divisions are offering the heating. We got inventory in all the locations, and obviously, all of our branches are, of course, selling the types of power. We still have the traditional diesel power in some places. Natural gas isn't available or what have you, so diesel still has a place. But traditionally speaking, we got tremendous cross-selling through all our divisions on all product or equipment classes.
Mm-hmm. And then what's sort of your utilization? I mean, what's your capacity in terms of revenue, and how utilized is this equipment right now?
Yeah, on some classes we're right at the final end. A lot of our structures are mobile structures, the offices and the meeting rooms and all these types of things. We're getting close to the end. We have some more on order and what have you. So we do have growth capex. Our growth capex, as you can see in the Q3 here, I think we had almost 10.5 million in new capex, and that's all for customer demand. So as you can see, it's kind of a moving target, Paul. So your question, if you would have asked me that question at January 1st of 2023, I would have said that the current fleet would probably have a 40+ million sort of revenue attached to it at full capacity. We're further than that in capacity, and we're staying ahead of customer demand. Like I said, of the one class of natural gas turbines, I think we've got 8 new delivered in this year, and we've got 3 or 4 coming before year end. So customer demand is high, and we're staying ahead of it. There are some supply chain things that are happening. It's like a broken record. You probably hear that from everybody, but we are staying ahead of it. There are some lead times in here, and we always have items on order. And we've been managing that just nicely. We hope to continue to dovetail these supply issues properly, and we have so far. So
Yeah. No, good luck. What's the kind of payback on this stuff when you buy this equipment or when you're spending this capex? What's your return on that?
Well, it's not cookie cutter. Some items are in simple payback terms. 2 years, 2 years, 2 months out in the extremes. Some equipment pays back 90, 100 days. So it's pretty good.
Yeah, yeah,
We
that's
like
amazing. That's amazing.
And the other thing we like about this rental business is it's not employee rich. Unlike the frackers and the drillers. I mean, when they put another rig in place, they got to hire 20, 25, 30 people in one go. That's not easy in today's employment market. So we like where we are. We're not employee rich. We can manage a very good amount of revenue very profitably with light on employees. Our branches, when they need employees, we're usually needing 1 or 2 at a time, so we can manage in this employment situation that I think Western Canada is in. But it's been manageable. I mean, I'd hate to need 20, 30 workers in one location.
Yeah, no doubt. So I mean, you've grown through acquisition, right? You've done a number of acquisitions in the past. Do you foresee other acquisitions, or do you feel like you've got the right suite of products right now?
Well, we do. We were talking about it, in the directors' meeting here in the last couple of days. That the amount of capex, it's almost like we're buying another business, just pieces at a time. Having said that, we do have our eyes open. There's M&A that would be valuable to us. We've got our eye on a couple of opportunities. We're in the early stages of those of feeling that out and doing some due diligence on those 2 opportunity. So I think for going forward in the near future, I think you can expect us to have some M&A in the mix as part of the growth. But right now we're fueling this growth capex, and it's working out nicely. And I think you can expect more of that going forward. It was a pretty pretty fluid year this year for more gear coming in on demand. We see 2024. Like I said, this trajectory is intact completely. So we do expect to deliver, ongoing increased results as we move into 2024.
Mm-hmm. And as far as R&D, do you guys do a lot of sort of internal R&D, or do you look outside for new offerings?
No, we do have a pretty crafty crew behind us, and we are constantly coming up with new innovations. We're developing classes of product, all on our own, sometimes in collaboration with the client. There's lots going on. So the answer is yes. There are some things happening looking forward in the turbine world. Obviously, we're not building the turbines. We have relationships with two of the leading players in these microturbines, and they have some very interesting opportunities going forward. One of the classes of equipment we can actually, with a very, very basic up tool, we can actually utilize hydrogen rather than natural gas. So that's in the future, having the possibility of going completely emissionless on these turbines. So there is some bullets in the chamber for the future that we will be able to help bring to our clients.
Mm-hmm. Perfect. I'm going to take this point in time here to remind everybody, if you've got questions you'd like me to ask Des, feel free to use the chat function down below, and I'll ask that question. We've been watching you now for a couple of years. You guys have been, I would say, very good stewards of capital. You guys were buying a lot of stock back about a year ago. What do you expect to do with additional cash? Like, as you guys continue to pile up the cash, where does that go? Where do you allocate that?
Well, obviously, the entire CapEx over the last 4 years to retool specifically this new fleet of natural gas turbines and all of the associated microgrid gear that needs to go along with it. We've been doing everything out of cash flow, and even how rich our CapEx was this year, it's all been out of cash flows. What we feel that there's a possibility, we like to plan. We've, like you said, I appreciate you giving us the pat on the back with our ability to manage the business and go forward and use our cash properly. We think that if we were able to get a good consolidation of cash, and this is a good time to say that management, we own a lot of our own stock. We're forward of 41% in management. So could there be possible special dividend that we can put out to our shareholders? It could very well be. And I think one of the things that we've complained about is that we're still, even with the increase in stock price, we're still trading at under our breakup value on our net equity, right? So there's still a deep discount happening here. So I think going forward, it would be nice to get some recognition. I think like I said, we're starting to get a little recognition now, but we've been trading under our breakup value for the last 7 years. So there's still a lot of runway for us, and I think we're starting to get a little bit of recognition now. And then the energy services, our sector that we're in, is starting to get a little more recognized. All the producers got recognized over the last 2 or 3 years, and some of them, like our clients, such as Cormaline or Canadian Natural Resources, their stocks have all gone up, 7, 8, 9 times in the past 3 years, right? So it's time for the services to get recognized, and we think, if we can get a special dividend out there, it might wake some people up to who we are.
Fantastic.
What do you think, Paul?
Well, no, I think you got two challenges that were facing you for a while. Everybody hated anything to do with oil and gas, and then secondly, you're a microcap, which everybody hates microcap. So I think the companies that we're seeing perform better than any others tend to be the small profitable companies, and that's why I think you guys are starting to get recognized. So I agree with you. It's you're kind of a bit in the sweet spot here. You've been in the penalty box for so long that now you're out, and I think starting to perform, and people are starting to recognize. So, anyways, that's my thoughts here. So, we talked about some of the good things that are happening. Des, what challenges does the business face right now?
Well, at the moment we've got everything finely tuned. So we like where we are position wise, the business position wise. We've got a tremendous force behind us in the employees and the expertise that we've built up here, specifically in our niche technology that we have. So we're in a good spot that way. I like where we are globally, the energy sector globally. I think the world of LNG globally is got tremendous runway, and I believe Canada finally we're going to have LNG Canada running here in the next year and a half shipping, and I think it is going to it's going to be a needle mover for Canada. Then after that, there's the Woodside project that will be under construction, and of course the smaller Cedar project that is headlined by the Haisla First Nation band, right? So Canada will be, in the LNG game. When you're looking at, Canada produces, 17, 18 BCF a day, somewhere in there, if I'm correct. And, this first phase of LNG Canada is going to take off, a little over 2 BCF. So 10% of our production will be taken offshore to better markets. And just in the last couple of weeks, I don't know if you heard, but I think the Netherlands, France, Germany have all signed 27-year LNG supply deals, with 2 with Qatar, 1 with Australia. So I really like where we are globally. I think we've got some use that word again, some runway with the commodity prices. I think if you wonder what keeps me up at night, it's not those things. Although, a 7-year downturn that we were in, that keeps you awake. But we've done that. We operated through that cash flow positive through that entire time. It wasn't earnings per share, but we were cash flow positive. And we had to retool the business, right size everything, and we're very good at that. So I don't want to say that keeps me up at night, because we know how to deal with that. But I think we've got some years in front of us. What I think is a good global market. And Canada's got a great place in the globe right now. With some LNG coming on, having our oil come to the Asian markets through the new Trans Mountain expansion, which is getting tied up at the moment here. So we're in a good spot.
Okay, good. Okay, so speaking of natural gas, I've got a couple questions that have come in specific to some of the LNG stuff. Here's one. It says, Des, can you speak to what the opportunity is given the final commissioning of the LNG facility in 2025?
So the front part of the question again?
Can you speak to what the opportunity is given that the final commissioning of the LNG facility in 2025? Right.
Okay, so what that project and it getting running and shipping LNG in 2025 is going to do for us. Now, understand that most of our clients, they're gas and gas liquids players. I read out to you where our locations are. So we're in that foothills play right up into northeastern BC from Alberta. So those are all the the Duvernay, the Montney plays. It's all gas and gas liquids. So all of these players are part of the feedstock to this LNG play that's in front of us. So And let me tell you that in northeastern BC, they're behind. And the reason why is, I don't know if you remember that the Blueberry First Nations band had a dispute with the BC government and what have you, and it you know, the Supreme Court basically it came down to a decision in favor of the Blueberry ban, and then there was a moratorium on drilling permits for a year and a half. So uh, what was happening is anybody that had inventory of permits, they were using them, and it came down to it's a good thing, you know, people were running out of permits, and before that deal got this, they got in a room and had a settlement. That settlement happened halfway through January of 2023. So permits started to flow again, but everybody is behind. So the activity levels here to fill up that line and get things proper, they're behind in their goals. So we see our clients that we're out working for, they've got a lot of work to do ahead of them. So we like where we are in the whole positioning of this. Because and the good thing is that the First Nations up in that region, they're all part of the economy, the oil and gas economy. They're a part of the decision making, of permitting. They've got you know, stipulations on how the land is developed at surface, and everybody is happy. Everybody's at the table, enjoying prosperity. Let's understand that these First Nations, the citizens of these First Nations, are in the oil and gas business. So they wanted to get things complete, and they did, because they benefit from the economy. And now they're in the system. They're in the permitting decisions, how the land is used, and they're involved. You know, in we have employees that are part of these First Nations, and there's many First Nations businesses that are owned by you know, the Blueberry Band and the Doig and so forth. So everybody is now nicely placed. I don't want to say it's business as usual. Things are a little bit different, but now we have the involvement of the First Nations, and I think we're in a much better spot.
That's fantastic. So listen, given that you're a leader in delivering these natural gas microgrids, what are the barriers to entry from you know, possible competitors?
Yeah, well, I'll tell you what. So the way we were traditionally with all the diesel gear, you're really quite mechanically centered. Everything's mechanical. So any of our competitors that are, you know, in the same type of infrastructure business that we are, they all have mechanical people, just like we do. But our expertise in Evolution Power, it's completely electrician, master electrician. So you've got there is a bit of a moat around this. We've built up an amazing amount of expertise in that division, and they're all electrical people. You know, we've got, you know, 2 mechanical people and, you know, 15 electrical people. So in that one branch. So just appreciate that it would, you know, if somebody said, well, you know, here's $6-8 million, let's buy some natural gas turbines. Let's be in this business. It's just not that easy. It would take some time to develop the expertise and, you know, all the things that are behind us that we started in 2018. Right.
Gotcha.
You just can't make that decision on a Friday afternoon and be in the business on Monday, right?
And then procure all the equipment, procure all the people that you need, the expertise. I get it. No, I absolutely get it. What's, you know, you've been at this a while now. What do you see as the long-term vision here, or the long-term goal? Is there an exit strategy? Are you guys, does this eventually get bought out by some bigger player? What happens to you guys?
Yeah, you know, I see that's kind of where I see the outcome. I'll tell you what. I've got a chart that I keep I keep repopulating every quarter, and it's basically the margin performance of all of us in the services industry, and nobody is matching our margins, our EBITDA and gross profit margins. They're not even close. I mean, our margins are, you know, one in US investor guy said, you got margins like a software company. And I, you know, thought, it's kind of almost right. You know, we're not that high, but we're darn close. Nobody in the services business has these types of margins. And I think as we keep, these quarterly results going out, we are getting some recognition. I just think somebody that's a larger player than us that doesn't have this basket of services and equipment classes will probably come knocking and be looking for us. I just think we'd be a revenue and margin juicy bite for a larger player. Nobody's sniffing around. It's early in all of our. We're just starting to enjoy a better Canadian energy economy. So, but you see what's happening on the producer side. There's lots of M&A happening around this Montney area.
Yeah.
With the recent Crescent Point taken out. Who did they just take out here? Brain block. Anyway, they just took out. We've been talking about it all week.
Yeah.
But anyway, and then you saw with Tourmaline, and so there's been some consolidation in this particular area on the producer side. I do think in the services there's some opportunities, and I think we're a gem. So I wouldn't be surprised if somebody came knocking.
Gotcha. So as investors sort of watching from the outside, what do you think makes the most sense to pay attention to? What maybe catalysts or metrics should we really be focused on to see that you guys are performing?
Well, I think if you're kind of new at what we're talking about here, I think you really got to see and do a little work and getting a comfort level on what. First of all, this Shell Canada LNG project that will be shipping soon. Like I said, it's going to be a needle mover. It's a big deal to the producers. And the other thing is look at the condition. Our clients that are asking us for the equipment and the services that we bring for them. These guys the last few years have been cash flowing like crazy. Right, they're doing everything for the shareholder, buying back their stock, they're paying down debt at massive magnitude, and they're returning, many of them fantastic dividends, and they're expanding their capex in the field, which gets us more activity, right? So all those things are happening, and the general investor, like you said earlier, is still not in the oil and gas or the energy sector as an investor. And I think the general investor just won't like us, getting recognized with these results. I think the general investor will not be able to ignore some of the, fantastic results our clients, the producers, are forming. So I think the general investor is going to come back into the energy sector, and it's going to lift the entire tide, or all the boats in the tide, and we're not there. I think the only people that are investing in the energy sector are, kind of the experts, the people that know it, and so forth. But wait for the general investor to come in, which is I think still ahead of us.
Yeah, no, I would have to agree with you there for sure. Des, we've sort of run out of questions, which means we've covered a lot. The last thing I'd ask, as we always do, is just what would you say is the key thing you want to make sure everybody walks away with today?
Well, I think what is important is that the condition we're in, the condition of our sector that we're in, are really, really key to feel comfortable in taking down a position in us or anybody in our sector. I think it's important that people know that the management here, and Paul, we've known you for a few years here, and you've seen how we talk and we operate, and you've seen us go from, I think the first time we talked to you, we were in the low 30s of management holdership. Now we're forward of 41%. So that's a big deal. I think I haven't seen too many publicly traded companies that have that kind of ownership on the management side. So we think we're undervalued. I know Len had an insider report the other day. He was in there buying, I think, a week ago. So we're active. You mentioned the NCIB. The start of that program, I think we're over 11 million shares bought and canceled. So we've really done our part here. And I think that should give, you know, your folks here in the audience an understanding that you know, we've got our you know, pace, and you know, everything we've said, we've backed up with our actions. And you know, we've still got lots of room. You know, we're as I said, we're still trading at under our breakup value, so there is a deep discount still here.
Fantastic, fantastic. No, okay. I mean, like you said, I've known you now for a couple of years. You guys have certainly, I think you've run the business fairly well from what I can tell. You've done a great job in allocating capital. Share price is finally starting to recognize the good work you guys have done. So, you know, listen, keep doing what you're doing. Come and visit us every now and then. Give us an update. We really appreciate it. Yeah, I want to thank you for the time you've given us today. We have been speaking with Des O'Kell, Senior Vice President and Director of Enterprise Group E on the Toronto Stock Exchange. Des, congratulations, and look forward to catching up with you again pretty soon.
You bet. Thanks, Paul. Thanks for joining us, folks. Appreciate it.
Bye for now.